Good day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for this Tuesday. And we're now at the 19th of January, 2021, and the time about 3:25 p.m. Central Time. Much earlier than normal. Well, tomorrow's the inauguration day. Today is the last full day of President Trump's presidency. We will find out probably later today or in the morning as to the amount of pardons that the president is giving out, and if he has any last-minute surprises. He'll be given a true military farewell at his request, so that'll be interesting to watch in the morning. And then everything will shift, of course, to the inauguration. Now, what we have to be on the lookout for, and the market's aware of it, is there going to be any subversive action anywhere? It could be state capitals, cities, Washington, D.C. I seriously doubt it's Washington, D.C., given that we have a full division. You heard the word, a division equivalent of the Army there. What is it, 25,000 troops plus? So that's pretty amazing if you think about it. That doesn't mean that trouble can't happen. I mean, it doesn't take much to create a problem. So I'm not saying that'll be the case. I'm saying we're all watching, hoping that is not it and everything goes smoothly. That's typically what goes on. Janet Yellen today spoke before the Senate Finance Committee. She did a fine job. I don't see who can differ with her. She's got the credentials. She's making it very clear that she believes that we have to spend more now to avoid a problem later. When asked that question, she was right on the money. She said her goal is to protect the average worker in this situation. Remember, she's got to play a different role than that of the Fed chairs that she held the position of. We'll see how well she can do that, but I don't think there'll be a problem with that. But of course, now we get to the other nominees for cabinet members and the like, and those become a bit more contentious. So we'll see what goes on there. When we take a look at biotech, the market went into a pause today, and while it's up 249, it did not take out last Friday's high or low. The market just stayed right in there, but a nice gain on the day. The trend is certainly to the upside. You have a clear-cut pattern of higher lows and higher highs according to the swing line. In addition, the market is upside bias. It is trading over what I call the line in the sand, the 18-day average of closes, keeping the bias up. So where might resistance be? Right here at the upper Bollinger Band. You hit that on Friday, probably saw some profit taking by the pros there. And now the question is, can the market go up and challenge it again? When you add to it the momentum study of slow stochastics, you're overbought. So do I think fresh money's going to get deployed here in that? No. Embed, yes. But right here, I think you're just overbought in an uptrend that has hit an upside target, resistance around the 156.16 level or slightly higher, the upper Bollinger Band. In SMH, you have a fully embedded reading. When I see this, that's what tells me that the trade is buying the market. Until that number with the red turns back under 80, it says it's embedded, locked in. That's what that means. And you have the pattern of higher lows, higher highs. You get up to the upper Bollinger Band, you've been pulling back, letting, I think, the pros in the market, and now they'll be looking at that upper Bollinger Band again, or very close to it, to take some money off the table. I don't see a trend at work, per se, in the industrial sector. I have a pattern of lower highs, lower lows, which is bearish. It is countered by the fact that the market is staying over the 18-day average of closes, so the bias is up, and the market is working off, current tense, working off an overbought condition. You lose that when both numbers are under 70. In order to embed, they both have to get back over 80, and that'll take a bit more time. When you look at what really happened, we had this very narrow band. You see it right through here. It widened a bit, but the market really didn't go anywhere dramatic with it. Did it go up? Yeah. Did it make a new high? Absolutely. But then it pulled back and the market is consolidating right here. In the energy sector, as long as you keep the embedded reading, you're bullish. Now, you're flirting with losing it. You haven't lost it. It's 81.51. We didn't get today the API numbers. They'll come out tomorrow afternoon. And then after that, we'll get the EIA numbers. I think the EIA is going to come out, if I'm right, on Thursday. It's either Thursday or Friday. It's generally just one day late after the holiday. You have a higher high, lower low. That is not a trend, but it is embedded. So you abandon what the swing line is doing. This rules the day. Means the trade, in my opinion, is still long. QQQ. You have a market that is stuck in the sideways action right through here of this Bollinger Band. Each time you go up to it, I know traders don't believe me, and they'll say, well, Ira, you're making new highs. I'm not disagreeing. Notice the market isn't really staying under the 18-day average for any period of time that makes sense. You got under it on a close Friday, you're right back over it, and you got over it one time, under it one time here, and popped right back. It doesn't want to stay under it yet. When it does, you'll come back down likely. The word is likely. I certainly don't walk on water. I don't know what the next day is going to do. But to challenge the lower Bollinger Band, and momentum is pretty flat right here. So I've got the swing line down, the bias up. Momentum has been correcting. It may have run its course on that. But if it goes up very much, it's going to be right back into overbought territory because I consider any reading over 70 overbought. In the emerging market ETF, you had lost the embedded reading. The market made a run for the 18-day average. Is that enough? I'm not convinced. Often you get closer than that to the 18-day average. We'll see if it does that. On Friday, you had gotten to a low of 73.97, about 10 cents away from that 18-day average. Admittedly, that's very close. I'm being a stickler with it because you still have an overbought condition. Overbought conditions either turn around and work for the rest of this week to become embedded. It takes several days to do it, or they break further to get out of that condition. So I see too many problems right there. When I come over to gold, the gold market is fighting the battle that I've been telling you against this 200-day average of closes. Now, the futures were up today about $8, $9, but you're still staying in an oversold condition. You were up $1.45 today, but the pattern is still bearish. You have to get over 174.46 to break the downtrend. That would not set up an uptrend because you would have still a lower low and a higher high. In other words, the bears have control, but I think because you're oversold, you're keeping fresh money from deploying in the market. If gold's bad, how good can the gold miners be? And that's what's driving this market down. You are in oversold territory. Now it gets interesting. Tomorrow when we reopen, you're probably going to get this 18-day average in red very close in price to 36.30, the last rally high we had. Why? 36.34, 36.42, 53. You're losing about 8 cents a day. That'll take it right into that zone. So that's going to become a fairly important number as I see it tomorrow. Could the market go down and hit the lower Bollinger Band? Of course it could. It's in a downtrend. But again, I don't think you're deploying new money on the short side because of the oversold condition. TLT, just sideways. I think these markets were listening today very, very carefully to Janet Yellen as she went through her Senate confirmation hearing in front of the banking committee. She was asked a lot of good questions. She made it very clear she's a fan of deploying more money, the $1.9 trillion and more if necessary. And she's for the people. I think she's for infrastructure. But she realizes that the question is, with low interest rates, if you can get enough growth out of it, does it pay for itself? I mean, I watched it. I don't know if you did, but there were a lot of questions asked. The trend is still down here, but any move over now, 152.36 negates the downtrend. It can actually turn the swing line up, turning momentum up for a resistance challenge potentially of 154.54. In the eurocurrency, oversold downtrend had been riding the lower Bollinger Band, hitting it almost every day, and today it got a bounce away from it. One day doesn't prove anything. Trend is still down. This market doesn't appear yet through on the downside. So I want to remind you, if you haven't seen all the products we have, I invite you to go to our website, www.iraepstein.com. You'll see on the bottom right our free offers. For those of you that are SPDR ETF traders, sign up for the free offer to try that if you haven't seen my early morning video. I'm getting a lot of feedback from my subscribers. They love the fact that it's early morning, overwhelmingly. And the reason is they're able to trade off the ideas within the first hour or so. I've got it all published, and they're able to see what's going on. It takes me, I wait for the market to open, then I put in what's called the daily numbers, adjust the charts, then I record. Between the recording of 15, 20 minutes or so, and that's what my average video is, the rendering and posting, they have it before 9:30 in the morning, and most say that just works fine for them. I'm Ira Epstein. You have a great day. I'll see you tomorrow.